Hello friends, in my YouTube channel Advocate Amit Kumar Gupta. Today I am going to discuss a case which is on section 10 subsection 23C clause IIIAD. The name of the case is Central Institute of Higher Tibetan Studies versus Income Tax Officer. This case has been reported in 98 ITR Tribunal Short Notes, page number 29, and the matter has been decided by Varanasi ITAT. The date of the judgment is 2nd August 2022. The facts of the case are a little bit unique. In this particular case, the Assessee NGO received donations in cash on the basis of a very reputed personality. Dalai Lama visited at their place. The devotees of the followers of Dalai Lama came and they give the donations in the name of the Dalai Lama. The amount was near about 45 lakh. This amount was received in Varanasi. The trust of the Dalai Lama was in Uttarakhand. So ultimately this money has to go to the Uttarakhand. Because it was difficult to carry the cash from Varanasi to Uttarakhand, so the assessee deposited this amount on the behalf of the Dalai Lama into their bank accounts and made the pay order, and this pay order was ultimately deposited into the Dalai Lama Trust. The case of the assessee was picked under section 148 and the explanation of this cash was sought from the assessee. The assessee gave all these explanations. But the assessing officer was not convinced with this explanation and he calculated the tax liability by treating this part of the income as an association of persons. The assessee moved to the CIT appeal and the CIT appeal also upheld the order of the AO. So the assessee does not have any other option except to go to the ITAT. ITAT in this particular case said that the assessee has substantiated the whole transaction with the evidence. Even the donors have given their confirmations that they have given this donation on the behalf of Dalai Lama, and even the Dalai Lama Trust has given their confirmation that this money has been received by the assessee on their behalf. The Dalai Lama Trust has taken that income into their computation of income and their financial statements. So the same amount cannot be taken into the income of the two assessees. There was the plenty of the evidence. There was no doubt about the transaction. So in these type of unique cases, you cannot tax the same amount in two persons. Sometimes it happens that there are transactions which have to be done for the peculiar situations, because these type of situations do not occur very regularly. So in this particular case, this cash was not related to the assessee. This cash was related to the Dalai Lama Trust. But this amount was deposited into the bank account on behalf of the Dalai Lama Trust. So when the assessee is substantiating the whole scene, the whole transaction, then you cannot tax this amount as an association of person in the hands of the assessee. Friends, we have seen that whenever these type of peculiar situations are there, the assessing officers are not able to take their stand. They just save their skin, and even the CIT appeal also save their skin. We have seen in the number of the cases that CIT appeal do not have the guts to give the relief to the assessee on the technical grounds. But in this particular case, this was not the technical ground. This was the case on the merits. The assessee has proved the transaction beyond limit. There was no doubt about the transaction. There was every piece of evidence. So the tribunal appreciated all the evidence and deleted the addition which was made by the assessing officer and which was subsequently confirmed by the CIT appeal. Friends, at the end of this video, once again I am repeating the name of the case, The name of the case is Central Institute of Higher Tibetan Studies versus Income Tax Officer, and this case has been reported in 98 ITAT Tribunal at short notes 29. The date of the judgment is 2nd August 2022. Thank you, friends.